Thank you very much. It's really good to be here, and actually to be talking, giving this presentation in English is a nice change for me, or not through an interpreter, which is not always as fun as it sounds. I had one time in Japan where I was giving a presentation to about 500 architects, and I began my presentation with a very minor joke, figuring I was going to break the ice, and gave the joke, and the whole audience breaks out in laughter, and I thought I really nailed that one. And it wasn't until I finished that I found out what the simultaneous interpreter actually said, is that the big American told a joke which I can't translate, so when I finish, please laugh. And of course, the Japanese being the Japanese, they all obligingly laughed, and we decided we won't start with any jokes anymore after that. But for those of you who don't know the American Hardwood Export Council, we work with the U.S. Department of Agriculture. We're what they're called a Foreign Agricultural Service Cooperator. Those of you who listened to Undersecretary McKinney yesterday talked a little bit about the programs we use, the Market Access Program, the Foreign Market Development Program. But our job is really pretty simple. What we're here is to facilitate and to promote American hardwood exports around the world. We're based just outside of Washington, D.C., and where you see in the dark blue there, we have actual physical offices with staff whose only job it is to help U.S. companies export. Where you see the light blue is where we have consultants, not necessarily a physical office, but we do have consultants and people on the ground. And again, their job is to promote and facilitate the trade in American hardwood exports. We focus on kiln-dried lumber and veneer and up the value-added chain. We understand that log exports are a big issue. They're a controversial issue within the industry. Our mandate within the USDA is to do what we can to at least help to facilitate the primary manufacturing in the United States. We understand that logs will be exported. We understand that the landowner has the absolute right to get the best return for his logs that he can. Nevertheless, we do what we can to help facilitate at least kiln-dried lumber and up the value-added chain. We carry out a number of activities. This is just the activities so far now in 2018. Our staff is very active. I myself just passed 4 million miles with Delta Airlines. Kind of hard to believe. I realize I just hit my 70th individual trip to China last month, dating back to 1996. So it's I've watched this grow, and I've watched things happen over the last 20 years. And I would say the last 4 months have been, without question, the most difficult in the 20-some years that I have been with AHEC. So really, what I want to talk about today is kind of start off with the basics. How do exports fit within the domestic industry in hardwoods? Because it's I think quite a different story from the softwood section, in that with hardwoods, exports are the main game in town, and they're becoming more and more important, and I'll talk about that in a second. China, we'll talk a little bit about what's going on there, what that market is like, what's happening now with the trade disputes, and what comes next. I'm going to talk a little bit about if China is going to start to diminish a little bit as a market, where else can we go? What are some other alternative markets out there for exports? And then I'm going to talk a little bit about log exports at the end as well, because I think it's pretty important for the overall state of the industry to understand what's happening with log exports, and again, how that fits back in with the lumber industry. So starting off, if we look at hardwood production in the U.S., probably no secret to anybody in this room that 1999 was, as far as production, the high point. Had a hard time coming back to that since. Of course, the recession in 2006, 2007 really took a dive. We've made a little bit of a comeback, but the last couple years, production has really kind of flattened out. What has really changed is where that lumber is going, what it's being used for. And these graphs, I think, are a little bit scary. If you look at the top, the dark blue bars on these graphs is domestic consumption of grade lumber. So we're not talking about pallet stock, we're not talking about railroad ties or industrial timber, we're talking about the grade lumber, basically number 2 common and above. Back in 1999, again, that was the high point for production, and that was the high point for domestic consumption of that blue. We saw a big drop off, just before the the housing crisis took hit, we were still doing okay, although we did see a little bit of change. But since the housing crisis, this is not cyclical. This is a structural change in the U.S. Most of the furniture production, a lot of it is gone. But it's not just the furniture production, it's that we're actually losing market share on kitchen and things like kitchen cabinets, on flooring, and it's mostly to other materials, not to other wood. And this is what I think is the real shame about our industry here in the US. We've seemed to find a way to promote ourselves overseas. We're not promoting ourselves domestically, and we're having our hats handed to us, essentially by other materials that are even making environmental claims against wood that are absolutely ludicrous, but we have no voice. And I think that's a real problem, and I think that's as much to blame for this as anything else. And it has a lot to do with what exactly comes off of the sawmill. If we go back to 2005, to just before the housing crisis, about 60% of the lumber that came off a hardwood sawmill in the US was sold as grade lumber. About 40% of it was industrial lumber, pallets, and so forth. That's actually almost flipped, not quite, but right now more than half of what's coming off a hardwood sawmill right now is pallet lumber, is industrial lumber. Things like, everything from crane mats to railroad ties. So the grade lumber, the more profitable end of the industry, is taking a smaller and smaller part, and that's an issue as well. It's leading, part of that comes from lower domestic production, lower domestic consumption rather, but it's still, nevertheless, that does speak volumes about the profitability of the hardwood industry. So if we take a look at that part of the pie that is grade lumber, the number 2 common and above, right now just over half of it is consumed in the United States. And this is actually so far through August of 2018. At the end of 2017, it was about 52%. So again, we're seeing already with just a couple of months with the trade war with China, we're seeing less being exported, and we're seeing the domestic take a little bit. But essentially, the rule of thumb is half of the grade lumber that's produced in the United States, hardwood grade lumber produced in the United States, is being exported. Exports have grown, again, particularly from the low point when the global economy was, as well as the U.S. economy, was in the dumps in the mid-2000s. We've seen very, very steady and significant growth in our exports of lumber since then. Hardwood logs, we've seen a little bit of growth, particularly in the last couple of years, but certainly not as much as what people seem to think is happening with log exports. And I'll talk again more about that at the end. And I get to the point now where I think that exports themselves really are the main indicator on what's happening. You want to talk about where are prices going for red oak or where are prices going for lumber. We always look at the indicators being housing starts in the United States. Going back, if you look at the red dots here, or the red lines here, are housing starts. The blue line, the blue line is the Hardwood Market Report's price index for hardwood lumber, so just the average price indexes. You can go all the way back to World War II, and essentially this blue line will follow almost identically with the housing starts. So that was the indicator. After 2005, after the housing crisis, I think housing starts in the U.S. and domestic consumption in the U.S. in general, I think has been now decoupled. You want to see what's going to happen with prices? Take a look at what's happening with exports. You see now where we have export prices had been going up, lumber prices had been going up despite the fact that housing starts remain very low. So I really think you can no longer, if you want to know what's going on with the hardwood lumber markets, the domestic housing starts is no longer, in my opinion anyways, your primary indicator. If you start taking a look at it, here you chart red oak exports to red oak prices. It's pretty clear what's driving prices, what's driving demand right now, and that's the export markets. As a result, the United States, we are by far the world's largest exporter of hardwood lumber. And if you take a look at the next couple, Thailand and Malaysia, this is almost all very low value rubber wood. So when you start looking at higher value hardwoods, we really are the only game in town. We're by far the biggest. You go down to Germany, Croatia, Canada, a little bit of some quality hardwoods. But if you take the next two out, which are overwhelmingly dominated by rubber wood, the United States, when it comes to fine hardwoods, decorative hardwoods, we really are the main global player. When you flip that around and you look at the world's largest importers of hardwood lumber, then it's not even close. I mean, you start looking at individual countries. China is by far the biggest game in town, and a lot of people are surprised the U.S., we're actually the fourth or the fifth largest importer of hardwood lumber around the world. But the game in town is China, so I will spend quite a bit of time here talking about what's going on in China. That was from all exporters, all imports from all sources. This is U.S. exports, and again, this is through 2017, but no surprise again that for us, China, and we include Hong Kong with that, although not Taiwan at the moment, is far and away the biggest, almost 5 times now the entire 27 countries of the European Union taken together. After that, Southeast Asia, a little bit of growth there. There's some good markets there. Latin America. Latin America is essentially Mexico. There's really not much else happening outside of Mexico. And the Middle East and North Africa, small market, but it's beginning to get some traction. But again, as you see, China is by far the biggest game in town. And that's a bit of a problem, because if you start looking at our exports, going back even as far as 1992, if you take China out of the equation, we're actually exporting less now to the rest of the world than we were in 1992. We're exporting less to the rest of the world. You talk about putting all of our eggs in one basket. China has been responsible absolutely for the growth in American hardwood exports over the last several years. So looking at that usage thing again, I guess the other way you look at it, of grade lumber, you divide it up. Again, just over half in the market, half exported, and half of that. So essentially 1 out of every 4 grade boards coming off of a U.S. sawmill is ending up, or was until 4 months ago, ending up in China. We're starting to see some changes now. That's a lot of volume right now that's looking for a new home. And I guess there's a lot of people in this room that know this much better than I do. But let's look at the China market, because I think there's still a lot of misunderstanding about what exactly is happening in China, what the Chinese market is all about. We still have a belief right now that China is a screwdriver economy. We send them the wood, they make furniture, flooring, and send it back. That was the case from the early days, probably back 1999, until the housing crisis in the US and Europe. At this point, and I'll show you a slide in a second, we estimate that probably about 80 to 85% of all the hardwood lumber we shipped into China at that time was manufactured into a finished good and shipped right back out. It didn't all come to us. Some went to Japan, some went to Europe, some went elsewhere, but most of it was consumed outside of China. When the US and Europe, the 2 biggest markets, went into their tailspin in 2005, 2006, the Chinese realized they had an issue. They had all this built up capacity, and the markets where they were selling things were disappearing. So where can we sell our goods? Where can we find about 1.5 billion new consumers? Hey, wait a minute. We have consumers here. And they did. The Chinese, they retooled for the domestic market. So even when the US was still mired and Europe was still down in the doldrums, we started to see our exports to China absolutely explode. And the vast majority of this growth, until just the last couple of months, the vast majority of this growth has been because of domestic Chinese consumption of the finished goods. It's the new middle class in China that now own their own homes, that want hardwood floors, that want solid furniture. It's all the commercial building that's going on. It's all the offices, all the hotels, all the retail. That's where this wood is being consumed. So when we're looking at it, the good news about the relationship between the U.S. hardwood industry and China is it wasn't simply moving manufacturing from North Carolina to China. It was new consumption of products made out of American hardwoods, and I think that's key, and that's been responsible for the explosion in exports that we've seen, particularly over the last 8 or 9 years. Now, you might say, well, look, China's the biggest wood furniture exporter by far in the world, so how can that be true? Well, the case is it's all about, when you talk about China, it's all about scale. Yes, China's the largest wood furniture exporter in the world, but China exports right around 14% of their wood furniture production. 14%. Canada exports about 90% of their wood furniture production. Italy exports about 90% of their wood furniture production. Poland exports in excess of 90%. So when you look at the major the major furniture exporters, Vietnam, they're all exporting, the vast majority of the furniture they're making is being exported. That's not the case with China. Yet China's still the biggest, but that's quite simply a matter of scale. The scale in China is so much bigger than anything else that we've ever seen that even with a small percentage of their goods being exported, they are still the major player in the furniture exports. And this is what I alluded to earlier. This was a study we had done where we were looking again. In 2000, about 80% we felt of the goods of the hardwood lumber that went to China came out of China in the form of a finished good and went either to the US, went to Europe, went to Japan, or some other market. Now that's been flipped entirely on its head, and as of 2016, the last time we did the survey, we're looking at about 80% now of the hardwood lumber that we send into China stays, and the ultimate consumption of that hardwood lumber is taking place in China. And people are asking, is there still room for growth? If we leave for a moment, we leave the trade friction aside, is there still room for growth? I'm asked all the time, what's going to be the next China? Where are we going to see, what's the next China? And I'll tell you where the next China is. It's in China, but it's going to be in here instead. China has a pretty interesting history when it comes to industrial policy and the actual location of where industries are. In the beginning of the century, when China was invaded by Japan, Japan was basically able to destroy the entire productive capacity of China because it was all along the coast. It was all along the coast. So when Chairman Mao came in and the communists took over, they had the brilliant idea where we're going to move all of our heavy industry way inland. Now, it doesn't make a lot of sense, but from their perspective, it kept it away from the invaders. And then when we saw at the beginning of the 1990s, when China began to open up and realize that re-exporting was going to be their vehicle out, they needed to get that back to the coast. And we saw some of the biggest, actually not some of, the biggest migration of human beings in history in the 1990s and early 2000s as people came from the center of China to the coast to be part of this new booming export economy. Now we're starting to see China try to reverse that a little bit. They had many people coming in. Now they're trying to develop some of the interior cities. And it's not that they're trying to develop the interior cities. If you get the impression that the center of China is a bunch of peasants in rice fields, you look at places, Chongqing. Chongqing is a city of almost 30 million people. Well, at least the urban area, including the city, is almost 30 million people. But if you look at it, if the city of Chongqing itself, if that city were an independent country, it would be the world's largest exporter of laptop computers as a country. And that's one city in China. So again, we are seeing development now in the interior, and we've seen very little penetration so far of a lot of the American hardwoods and a lot of the stuff in there. And I think there is still an awful lot of room for growth. We heard yesterday about China's their Belt and Road Initiative. Yes, it is to connect China with the rest of the world and sort of recreate the Silk Road. But a big part of recreating the Silk Road is also making sure that this part of China has infrastructure and has communication as well. And that's what's going on right now. And I think that's where the real next, if we can get past this trade war, if we can get past these tensions, there's still tremendous growth opportunities for hardwoods and for softwoods as well, for that matter, in the interior cities of China. So we are hearing, yes, the Chinese economy, I'll talk about in a minute, is beginning to slow down. There are some clouds on the horizon, but again, I think the long-term potential in China remains extremely bullish. But what we're seeing now, where we're being exposed, is we've had an awful lot of eggs in one basket. If we take Canada out of the equation as a market, we're looking at 80% of our red oak exports were going to China. And again, this is before the trade war 4 months ago. 80% of our red oak, 76% of our alder, 75% of our cherry, almost 70% of our ash, 60% of the soft maple. This is a huge percentage of our exports, 54% of our exports going to China. And things are starting to happen. Now we look at the tariff war and we look at the trade policy, and we tend to think, because we like things simple, it's getting difficult now in China because of the tariff war. Yes, there's no question the tariff war has thrown a monkey wrench into it. But don't believe for a second that we weren't already seeing issues in China. We are seeing slowdowns in China before anyone was even talking about tariffs and trade wars. There's a couple of things we had seen going back to last spring and last summer. inventories really across the country in China were extremely high. Import regulations, mostly with logs, which I'll talk about in a minute, were being tightened by China, were slowing things down. At the same time, environmental regulation enforcement, this really hit hard a lot of the traditional furniture and flooring manufacturers, sort of mom and pop shops that had been since the early 2000s, huge consumers of American hardwood lumber. With China's new regulations on emissions, new regulations on environmental regulations, we've had literally hundreds of these factories have been closed down by the Chinese government, and those have had a direct impact on us as well. The RMB depreciation I'll talk about in a second, the Chinese currency, that was a headwind that even before it started with the trade war. But here, start looking at housing market uncertainty. China right now, as of June, had actually surpassed Japan with 13% vacancy in their housing market. So Japan had the highest before. Now China's actually got 13% vacancy. They've got even bigger than that. Nobody really knows in commercial real estate. And the Chinese government realizes there's a bit of a bubble there, again, particularly on the coast, and they've been tightening credit. They've been tightening requirements for new building permits. They've been tightening consumer credit. So again, all these things were already happening before we even saw the first shots of the trade war being fired. I don't want to get into too much detail. Right now, most hardwood logs and lumber are being tariffed at 10% going into China. A couple of exceptions that are 5% right now, but the big worry is that as of January 1st, assuming there's no kind of breakthrough, and considering there's not even any talks on the table right now, I don't think we're going to see any kind of breakthrough. We're going to see these for most species on both lumber and logs are going to jump to 25% come January 1st. So if we think we're hurting now, we're going to really be hurting starting January 1st. And again, this just tells which are in there. Everything that you see here in the 10% category is going to turn to 25% on January 1st. Everything you see here in the 5% is going to turn to 10% come January 1st. And that is just about everything that we export to China. So we're looking at even rougher seas ahead. And, adding to that, a lot of people haven't really realized, the dollar's been strong everywhere. But just in the last 5 months now, the RMB has depreciated 10% against the dollar. So when you look at it, right now, we've got 10% tariffs on Chinese goods. Well, from their perspective, with the 10% depreciation, they're breaking even. They've got 10% tariffs on our goods. You add the depreciation of the RMB, essentially, our goods now going into China are 20% more expensive than they were. So with this depreciation, it's actually amplifying the Chinese tariffs against us and mitigating our tariffs against China, which again is making the situation even more difficult. And again, we like things simple. So we call China a currency manipulator. That word's thrown around all the time as if every country doesn't manipulate their currency. But what's really interesting about this is actually the reason we saw this increase is because China stopped manipulating their currency. They had been in the foreign exchange market in a huge way for about the last 4.5 years, but to prop up the RMB. So they've been intervening in a large scale to prop up the RMB. And again, in the U.S., you got to stop intervening. You've got to stop manipulating the currency. So they said, okay, you know what? We are going to stop manipulating the currency, just like you said. That's where we've seen the 10% drop. So again, the Chinese, there are a lot of things. They're not dumb. They're a very formidable partner when we start moving forward, when we start looking at how we're going to reach agreement on a large number of things. So what's been happening in the last 4 months since that? I think what's really disappointing is that we look at the early part of the year through April, we were actually on a path to have the highest exports ever around the world and the highest exports ever to China. And then we were looking at it, this is by dollar, starting in April, May, we had the first announcements. We've seen now a drop off every single month. The September numbers will come out in about 2 weeks, and I suspect we're going to see something probably even down around here come September. It's slowing way down, and we're talking significant volumes right now of hardwood lumber and hardwood logs that are looking for a home. and it's going to get worse. If we look at that same information, but on a volume level, very similar story. We're looking at a pretty drastic decline over the last couple of months, and we expect that to continue moving forward. This is an interesting graph talking about red oak, which of course is our most prolific species. It's by far our biggest export to China. Last couple of years, of course, there's always at the end of the year, there's always this drop off. Does anybody know why? You always see that every year? Oh, Ron? Yep, the Chinese New Year, so that they don't have anything shipping out in November and December, so that it arrives in China because essentially the ports and everything else shut down for a month. So that downturn is sort of normal. What's not normal is seeing that downturn happen in June and July instead of November and December. And we're already seeing, as a result, the Chinese market is contracting a little bit, but not nearly as fast as we're losing share. So we've already gone through the first 6 months of this year compared to the first 6 months of 2017. We've gone from almost 20% of market share to about 17% of market share in China. So again, they do have other options out there. Not a lot of high quality options out there, but again, as we know very well in this country, consumers don't always know the difference between white oak and beech, or between high value timber and low value timber, especially when things are painted and everything else. So I think we like to believe that only we have this cherry, only we have this lovely walnut. They need to keep us in there. Don't be so sure. Don't be so sure. We can be substituted out just like anybody else can. So we start looking at some of the markets outside of China. The biggest one in Asia, anyways, outside of China, is Vietnam. And Vietnam's been a good market. But Vietnam right now, I think, is where China was 20 years ago. Probably 90% of the hardwood lumber we send into Vietnam is re-exported. But we're beginning to see that development of the middle class in Vietnam. We're beginning to see more and more hotels being built. We're beginning to see more and more office spaces being built, more and more private apartments being built. So we're seeing Vietnam slowly turn into a consumption market as well as a re-export market, and that's a good sign. But Vietnam can take nowhere near the type of volumes that China can take. So I mean, we can triple or quadruple going into Vietnam, and it's not going to make up for what we could potentially lose going into China. Other markets, Japan is just very steady. Japan's a very high value market, but again, volumes are not great, and they've been really steady over the years. Very difficult place to develop new business. Indonesia trying very hard to compete with Vietnam on the furniture re-export, same with Malaysia. In fact, the new Prime Minister of Indonesia is a former president of the Indonesian Furniture Manufacturers Association. They're putting a lot of effort behind trying to develop Indonesia as an exporter of wood furniture. So far with kind of mixed success, because they're using rubber wood, and they're trying to get in on the low end, and I just think that's not necessarily going to be their best formula. Vietnam in the first half of this month, again, we've seen a lot of the wood that was going into China kind of moving towards Vietnam, and Vietnam picking up a little bit of it, but again, not nearly enough to make up for the lost volume into China. Indonesia, we're seeing a little bit of an uptick. Malaysia and Thailand, we're actually seeing drops so far in 2018 through the first 6 months. Vietnam's an interesting one because they are developing their re-export market, and it's growing very quickly. If you look at their exports of wood products, and this includes not only furniture, but everything from picture frames and handicrafts and so forth, we're seeing quite a bit of growth in their exports, and we have a relatively small piece of the puzzle, a small piece of the pie into Vietnam. We're only about 13% of their hardwood imports. So again, I think there is a lot of room for growth there, and I think as they begin to climb a little bit higher in the value chain with some of the things they're manufacturing, and as we begin to see more development in hotels and infrastructure and housing in Vietnam, we could see our percentage grow substantially, but again, not nearly enough to make up for what is potentially lost revenue in China. Start looking just at the rest of the world quickly. Taken together, North America, this is essentially Mexico and Canada, our NAFTA partners, and then the European Union as a group are the next two biggest. If we look on a country by country basis, surprisingly, the United Kingdom now, if you take out outside of Canada, Mexico, China, and Vietnam, next biggest market then becomes the United Kingdom. But the drop-off between those big four and these numbers are tremendous. So again, we're talking, these would be blips on that big graph where we showed China as the biggest importer. So we start looking at what's happening in NAFTA. Again, we've seen between Mexico and China together, Mexico and Canada together. Again, we've seen a bit of a drop-off in the last couple of months, which is a bit worrisome. We are seeing in Mexico in particular a real rise in anti-Americanism. And at the same time, we've seen the Mexican peso devalue by almost half in the last year, in the last 14 months or so. So Mexico, it's surprisingly only about 2% lower than it was at this time last year, which, given the almost collapse of the Mexican currency, I think is a good sign. But we're in for a rough relationship with Mexico. Their new president, who's going to take office on December 1st, is not a fan of the United States. I think the chances of working together on a number of issues, whether it's phytosanitary, are going to get more and more difficult. So I think Mexico, we need to be a little bit worried about as a market moving forward. But the fact that NAFTA does appear to have been at least initially negotiated, and some of that uncertainty has been taken off the table, hopefully things will stabilize a bit. The European Union, same thing. We're seeing Europe is still kind of struggling through. We still have huge debt problems in places like Italy. Spain's still struggling to get back in. So we're still seeing, it's probably not a crisis anymore in the Eurozone, but we're still seeing difficult trading conditions in the EU. And we're about to reopen now these trade negotiations with Europe, so things could get a lot worse in Europe. And part of the thing that concerns me promoting internationally is that when you take a look at where we're having trade spats with what countries, whether it's NAFTA, which hopefully has been put to bed, the European Union, and then China, we're talking together, we're talking 82% of our exports are going to countries where right now we are actively engaged in essentially a trade war. That's got to be a worry to everyone in the hardwood industry, or in any industry that's exporting half of their production. Start looking at a couple of other markets. The Middle East has been steady. There's some good news in the Middle East. Surprisingly, we're seeing some decent markets there. The Emirates, principally Dubai. We saw great growth in 2017. This year hasn't been real good so far, but there's still time, because we start to see in Dubai a lot of buying is done towards the end of the year. A surprise Turkey, with all of the political unrest and the absolute collapse of the lira in Turkey. We're seeing actual growth there, which I think is a really, really good sign of things to come. Saudi Arabia, Jordan, Bahrain, we're starting to see increases. Pakistan is a very good market. But again, each one of these, while they all help, these are pinpricks, again, compared to the volume that was going in to China. So I'm going to end with just a little bit about log exports, and I know this is a touchy subject, along the industry. If let's look at big picture. As of the end of 2017, we've seen pretty significant growth. I think is obvious, but we still haven't reached where the peak of log exports was. I'd heard from a lot of people saying, no, we're in uncharted territory. We've never exported so much. That's not quite true. We're getting close. But we're not there yet. And the growth has been incremental. It hasn't been exactly a huge draft. We looked at what's going to China and what's going to the world in general, but actually there are really three markets when we start talking about log exports of any volume, and that's China, Canada, and Vietnam is the third. And look at where Vietnam is compared to the others. So it's really China and Canada. And what's actually happened now is China has overtaken Canada as the biggest importer of hardwood logs. And that's really what's changed, is where they're going more than what. But the second thing has changed is at the type of logs that are going over. When we start looking at unit values of the logs that are being exported, we see a very clear downward trend. And what that's telling us is we're going from traditionally exports of essentially veneer logs to now into saw logs, and even in some cases rather low-grade saw logs. So we're seeing a complete change in what's being exported when it comes to hardwood logs. And then, again, we look at China where they're coming in, the U.S. where China gets their hardwood logs, you can see the growth from the U.S. over the last couple of years. And the main reason for that can be laid right here. Russia, at the end of 2016, put an 80% export tariff on log exports. So essentially, the tap was turned off of temperate hardwood logs coming from Russia into China. The Ukraine's picked up a little bit, but essentially, if you look at all of the rest, you're looking at tropical logs, Solomon Islands, Guinea, Mozambique, Nigeria, Congo, Cameroon, a little bit in France, and they're tightening up. But essentially, Russia was the supplier of temperate hardwood logs into China. Russia turned off the spigot, and I think that, as much as anything, is the reason behind the huge growth that we've seen from the United States in logs. And this starts to wreak havoc, I think, with the sawmill industry, and I think what a lot of people are worried about. And this graph, and especially the one that's going to follow, which comes from the Forest Service, I think is probably the scariest graph you're going to see. If we look at log exports, particularly red oak, follow this red oak line, the last couple of years, what's happening with red oak exports to the world, again, primarily China. And then look at this graph. This adjusts for inflation and compares stumpage prices for red oak logs to lumber prices for kiln-dried red oak lumber going all the way back to 1971. And essentially, lumber prices adjusted for inflation are almost exactly where they were in 1971, adjusted for inflation, but stumpage prices are up 300%. That's a problem, I would think, for those of you trying to operate sawmills. And as I said, this is probably about as scary a slide as you're going to see. But we're starting to see a turnaround in China and logs slowing way down in China. As was brought up yesterday, in April, the Chinese realized they had these laws. They started to find bugs in a lot of ports. Some people believe that this first salvo on the logs was this log change in China was like the first salvo in the trade war, and this was China's way of getting back. I don't think so, for a couple of reasons. First of all, we do know through our APHIS contacts and our USDA contacts in China that the Chinese were finding bugs in a lot of ports. They did realize that was a result of a lot of wood that was leaving the United States without being fumigated, without being debarked, that was heading towards Hong Kong and was being diverted when it got to Hong Kong into other ports. And another reason that I don't believe it was part of the trade war is because at the same time that they issued this tightening of a regulation that already existed, this is not a new rule that was put in place by the Chinese, they lowered the VAT on logs. So again, I don't think it was part of the trade war. I think it was a legitimate concern on the Chinese that they were finding invasive pests in a lot of their ports. But that has had an effect. If we look at that was in April. And look what's happened the rest of 2018 in the gold in our log exports to China. They've gone down rather substantially, especially when you look at it from a volume basis. We're seeing quite a drop. And again, this is probably an easier way to look at it. Here's end of April, and then here was that drop coming back a little bit, but at least for now, it doesn't seem to make economic sense to debark and ship the logs. And of course, we know there's limitations on the methyl bromide and our ability to fumigate the kind of volume of logs that we had been sending to China. So it's going to be interesting to see how that plays out moving forward. But with that, I'll leave it, and I know we'll do questions, I guess, as part of the panel. But thank you all very much for your attention.